This is important. Currency moves can be destabilizing. We all know the simple math. When tariffs go up, currencies go down. That's the prescription. But it has some ugly side effects, and one of those is companies that have borrowed in dollars in China. Now their debt burden is much greater than it was. We already know there's a debt problem in China. This exacerbates it too. It makes buying treasuries less attractive to the Chinese. Now the prices are higher when denominated in that local currency. And three, it negatively impacts U.S. businesses selling into China. Now their products are more expensive and either have to be discounted or they've got to take that hit to earnings. So that alone is a destabilizing impact, but it has broader global impacts as well.
Well, somebody's been buying bonds, Jeff, because we're seeing a 10-year at 1.76%. Who's doing all that buying?
Well, certainly we've seen a global interest in treasuries, gold as well, right? So traditional safe havens have definitely seen some interest in the markets here. But one safe haven investors may not be considering some shelter from the trade storm are equities in Europe and Japan. I know they don't look good this morning, and they haven't looked that good this year, but they aren't directly impacted by this U.S.-China trade war, and actually, they may benefit somewhat from it. Remember, the U.S. and China are shutting out each other's companies, for example, in 5G, but European and Japanese telecom companies may actually benefit from that. Japan's got the 2020 Olympics coming up. Germany has a budget surplus. They could cut taxes. So there's stimulus coming there. They could be a relative shelter in this trade storm.
By every measure, the Japanese stock market is the cheapest in the developed world, whether you have price to earnings, price to sales, price to book, price to enterprise value, whatever it is. And yet, the Nikkei can't get out of its own way. It continues to fall, but you remain optimistic.
I do. I think on a relative basis, Japan might look better than many other parts of the world. They may see a recession, a technical one, later this year in response to that sales tax increase. But again, looking to next year, a lot more stimulus from the Bank of Japan that may actually help banks rather than hurt them as rates go lower. Big new QE program expanded there. Again, I mentioned the 2020 Olympics, rising loan rates, falling debt. I think there are a number of things that could come together there. One other thing I'll just add is that as car auto finance rates have come down in the U.S. You mentioned the lower Treasury, but it's across the curve in the U.S. Auto finance rates are coming down. That could help Japanese car exporters. Remember, Trump seems to be fighting one trade battle at a time. And if this puts the auto battle with Japan off, so much the better.